Hey traders, David Frost, MyStrategicForecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, March 14, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, let's put the market in perspective from a number of different angles. We're going to take at long-term charts. We're going to take a look at short-term charts. We're going to unpack the whole thing. We're going to learn some stuff about how the market operates day in, day out. So when you look at the daily chart, it's pretty obvious. You see the trend line on the screen. We've been talking about that trend line for weeks already. And today they came down to run a test at said trend line, ultimately bounced right off of it into the end of the day. They had one of their end of the day famous ramp sessions, also known as AKA a jam session. And when you look at a 5-minute chart, that's what an end of the day jam session looks like, right off the trend line. Nice spike through it, but right off the trend line. Funny how that works, isn't it? So net, from a daily chart perspective, has anything changed in the market? Has the uptrend changed? No. Has anything changed materially on the market? Is the structure of the market the same? Yeah, this was a pullback day where at the end of the day, the SPY was down $1. The ES was down 10 or 11 points. That's it. What about the weekly chart? Now remember, the week closes tomorrow, and not closing above last week's high, which they may or may not, we don't know yet until tomorrow at 4 o'clock or at least some point throughout the day, we'll have a good idea. Not closing below that or not closing above that, keeps the fact that we're in an on-time type of situation intact. You have a sign and or signal of a trend change last week. You're at an important resistance area in the trend line. All those things we take into an account from a longer term perspective. This is quad witching options expiration week. Weird stuff happens. I can't say anything was out of the ordinary or weird today. Just the fact that they tested the trend line and bounced off it. Now, for those of you that disagreed with the trend line, and that's fine, that's what makes a market. 2 people, 10 people, 20 people, 100 people look at the same information and come up with any number of variety of ideas on what that means. I had an idea about the trend line, got some flack for it for a while. Does anybody now disagree that that trend line is important? Let me hear about it under the video. It's an open trend line discussion. Let's look at a couple of other time frames just to make sure that we get confirmed of what we're seeing from a daily chart, a weekly chart. Here's a 4-hour chart or a half-day chart. Anything different here? No. The market's still in an uptrend above all the moving averages. They tested the trend line and the 20-period moving average today on the 4-hour chart. No revelation, no change. What about a 2-hour chart? Well, they started to break down below the 20-period moving average, but by the end of the day, what'd they do? They recaptured having finished above all the trend lines on a 2-hour chart. The trend is your friend. The trend is still up. There is no change from a 2-hour chart and beyond. We could say the hourly trend today was changing until the end of the day when they rocketed off the trend line, but certainly getting below the 50 and the 20-period moving average, that changes the shorter-term trend. It changes the hourly trend. But this is why I urge you to look at a variety of time frames. Look around the horn. Get the big picture. Know where you are from a big picture perspective. My traders inside the numbers live room, they knew about the trend line. They were reminded about the trend line today and each and every day because number one, it's on the chart. And number two, if prices headed in that direction like they were earlier in the day, we want to know about the trend line. What's close by? What's down there? Do we need to know what important things are down there? Well, yeah, if you want to be successful in this business, you need to know where the important stuff is. Write that down, put it on a sticky note. Inside the numbers today, we had an early beat on the numbers at 0 dark 30. They weren't moving much until after the opening bell. We had some upside stuff and we had some narrow stuff on the downside, but it didn't really come into play because they did move them after those notes were put on the board. So early on today, about 8:55, as you can see here, I put on the board the zone between 514.40 and 513.45. Write that down for a second. Put it on a sticky note. 514.40 down to 513.45. Now that note was put on the board early on, half an hour before the opening bell. You can see that support zone when the market collapsed down. We had some other stuff on the board. You could read the notes, pause the video, go back to the chart to double check the work. However, there's more. I made an adjustment and I raised the price before the opening bell, and traders had to take the ride down to that secondary zone that entered the market over here. So that was my fault. That was incorrect on my part. That's part of the business. I'm going to be wrong. I'm not perfect. You can't be right 100% of the time. We're going to be right most of the time. But here's the rub. We had the numbers underneath. So traders that had to take the ride knew where the ride was going, knew where to add into the trade, knew where the bounce back was likely to come, and was able to work out of the, in many cases, a profit scenario, but it didn't feel good. We had to take some heat in the live room, but that's part of the business, and I take full responsibility. You could see it come up on the board here again, 9:53. 4:40, the door opens for 5:13.45. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here. All the numbers are in here. And today was one of those days for many traders in the live room and inside the numbers where the early on, because I made the adjustment, it was a tough sleigh ride for a while. But if you have the numbers, you can be fine. You can work out of the trade. Many, many, many did. Let's take a look at stocks and S. We'll look at each individual one as they all hit their entry objectives. First up, we'll look at Futu. You could see the first number at 56.56. They did the thing where they did the deal at that number. They bounced up. They gave you the base hit and then some. Came down. Second number gave you the base hit and then some. The numbers work. Bud, 61.15 was the number because it opened below the first two. So this is off the board, never existed. This one you could see was resistance, but they opened below, so it never existed. And 61.15 was the next number. They creeped into it. They went down to 61, fluttered around, and hang out there for the rest of the day. So this was really a no trade. We don't like creeping ones. We want them to come in here, not after they bounce and creep. There are your numbers in X. They did it late in the day. Not sure any trader took this trade, but you could see the numbers worked. Sentinel 1, S, all three numbers worked. First number worked. Second number worked back to the first. Base hit and then some, more than a base hit. And then the third number worked. So all three numbers provided an individual trade each time. The numbers worked. What's going on over in Camp IWM today? They were down over 2% most of the day. They recovered a little bit at the end of the day. Filled that gap down here around 201. 201 was somewhat of a line-ish in the sand. We talked about it in the live room today. But there's a better line in the sand down here on a weekly chart. This weekly big-time breakup candle low, 199.15. Close the week below that, and something different is going on than a pullback operation. Very important place. As for the live room today, what I said in terms of the IWM was between 201 and 200, you'll get a bounce back in the other direction or I'll eat my hat. I did say that, and you did get a rip back in the other direction. See that jam session at the end of the day. Now let's look at this another way. Right? We want to look around the horn. We want to look a multitude of things. We had a pickup in volume today. Okay, that's item number one. The small caps or the IWM, Russell, is my favorite market leading indicator. So it had relative weakness today by a lot. Finished down about 1.8% to the spiders, 0.2%. That counts. That's relative weakness. Now, if it's a one-day wonder, that's fine. But for now, it's a puzzle piece, and it's on the table. My second favorite market leading indicator are the folks down at the transportation department, and they got taken out behind the woodshed today a little bit, finished down 212 points or so. They were down more earlier, and you can see between the convergence of the 20 and the 50 period moving average, this is what they call in the trading parlance a breakdown. Let's go over to the weekly chart. What's it saying and what's important as they close out the week? Well, tomorrow I would say it's extremely important that they stay above that 20-week moving average. It's not the end of the world if they don't. However, it's not good for the bull case if there was a bull case in your mind. If they're going the other way and they flush them tomorrow, 15,265, 275, 255, in there somewhere. Sometimes they come up short, other times they spike them through. But down there with a daily chart spike of the convergence of the 200 period moving average and the 100 period moving average at that number, another spot where if they didn't offer a bounce back in the other direction from that place, I'll eat my hat. What about the Qs? Let's put things in perspective. Down 0.25% today, a little over $1. Tested once again the 20 period moving average on the daily chart. There's nothing wrong with this chart. She's in an uptrend. The trend is your friend. That's the larger picture assessment. And then the one step larger or one deviation larger perspective is she's a little bit extended from home base on the weekly chart. So therefore, going sideways for a while or pulling back a little bit, letting home base creep up the price isn't out of the question. It's not out of the ordinary. She never likes to get too far from home base. Where'd you hear that before? You heard it here for a long, long time. It's always the case. What about the financials? Down day in the financials, not a reversal day. However, you could see there was a significant pickup in volume today. We'll take that seriously and we'll say, hey, maybe it's a reversal candle, maybe it's not. That's subjective, but we know numbers. And what number do we have? We have $40.80. It was a target on the way up. Once they got above, they had a new target. They didn't get to the new target or didn't get there yet. Either way, we'll use $40.80 as an important thing for now. And below that, we have the 20 period moving average for now. So where'd they close today? On close is $40.83. They're still above a very important place. Technically speaking, there's absolutely nothing wrong with the financials. A down day, which this was by 0.8% or 33 cents, that's not a big deal. But we will take it. It's a small puzzle piece. We'll put it on the table and we'll watch it closely because, and the reason is that if there's nothing wrong with the financials, we know that by and large, there's nothing wrong with the overall structure of the market. However, if the financials start to crack, that's going to foretell that the structure of the overall market is changing and there may be underlying problems. What about Smash Mouth? Down almost 2% today, 1.8%. Now, we know a couple of things. We're going to reiterate this again. Last Friday's candle is a reversal candle. They had a one-day bounce back of a partial retracement of that candle, and here they are. This is to be taken seriously. Why? Because the Philadelphia Semiconductor Index is a wonderful proxy for the tech space, and if the tech space unravels, everything else is going to unravel too. Now, yes, this is a reversal candle. This is also an area at 213.35. It's not that far away when you consider all things considered, how far they're up, how much they're up. It's around the 20 period moving average. It's also the most recent breakout area, coincides just under a big time breakup candle low, 213.35, 212, 212.50, 212.75, 213.55, anywhere in there. Sometimes they come up short, other times they spike them through. That should be sooner than later. Not if they hang out here for days and days and days, but sooner than later, that should be garden variety at minimum of intraday support. Write that down. Put it on a sticky note. It's a tradable event from an intraday perspective, overnight, 2 days. like that, something like that. Keep your eye on it. NVIDIA is the leader from the semi space, the AI behemoth, the monster stock. Also, reversal day coinciding with the semis last Friday, same routine. So again, this may just be a pullback back to the 20-period moving average, which is no big deal. There's a former breakout area just above that at 8.25. The 20-period moving average could be there tomorrow. It's a big-time place. You have symmetry. You'll get a bounce around that area, 8.25, most likely. NVIDIA. Before we wrap things up, let's reiterate, we've got tinfoil hat stuff coming. Markets have a tendency to trade down or up into these tinfoil hat events. We've got one coming midweek next week, I believe, around 19th, 20th. We'll call it Tuesday, Wednesday, Thursday. They could trade down into that. Expect a reversal from that point. Not expect, but we're watching out for. And then if that happens, I'm going to lay out the next schematic for the next few weeks. I have a good handle on what I think is unfolding if, in fact, the market ends up trading down into the tinfoil hat event mid-next week. Stay tuned for that. If I told you how much I appreciate each and every one of you, without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.